Welcome to our channel. On this episode, we focused on the digital asset known as XRP. We gather videos and information from the web, and if you stick around, we are going to share it with you. So stay tuned for news and updates.
Digital Euro, final question for you as we're short on time. I asked you at the beginning about sort of how we got to this point. I'll ask you at the end to look forward a little bit. 5 years' time, hopefully we're gathering together all in person for the BIS Innovation Summit. Where will the world be in terms of digital assets, in terms of central bank digital currency? If I could ask you to forecast a little into the future, where you think we're headed.
5 years' time, I would say many of us will have completed the project, will be in a position or will have launched their digital currencies. We will have done enough good work so that those currencies are convertible easily. We will have worked hard on our payment systems so that transfers and settlements can be orchestrated, organized in a safe, secure and fast way, faster than now, both between central banks and commercial banks, but also between customers and commercial banks, and that the volume of fees and earnings by some will have declined to the benefit of better services and happier customers.
I would say that the XRP ledger is positioned to be kind of like the best blockchain for tokenization, right? Tokenization of assets. Now, as I said, the XRP ledger was the first blockchain to allow tokenization of assets, and there's been things like gold and silver tokenized on the XRP ledger for many years now, right. Euros, US dollars, etc., and other cryptocurrencies. Ethereum is actually tokenized on the XRP ledger. Bitcoin is tokenized on the XRP ledger. So yes, this is the thing, that the XRP ledger was so far ahead of most of the other blockchains. I mean, the XRP ledger existed before Ethereum did. Vitalik Buterin, the creator of Ethereum, actually tried to intern at Ripple right in the early days. So the XRP ledger was so far ahead, but I think what has happened is that people are not aware of the functionality with the XRP ledger. As you say, we've had a chance to kind of build it, break it, build it again. And in some ways, I say this in the nicest possible way, but sometimes the XRP ledger is possibly perceived as boring because it just works, right? It hasn't got to deal with a lot of the big dramatic issues that, say, Bitcoin and Ethereum have to do. So Ethereum's moving to proof of stake. That's a massive thing at the moment that's taking up a lot of development time. Bitcoin is building second layer solutions to fix the scaling problem. The XRP ledger hasn't had to deal with any of those issues. So in some regards, it might be seen as like boring to some people just because it works, right? And so sometimes it's a little difficult to kind of say to people, hey, look, we've got all of this. We've been doing all of this. It just works. Right. So, and a lot of times as well, it's to do with terminology, right? The XRP ledger existed, again, before all of these other systems, and before a lot of the terminology within the industry existed. So the concept of stable coins and tokenization, the XRP ledger was doing it beforehand, but we called it issued assets, or we called it IOUs. We didn't call it tokens or stable coins, but it's exactly the same thing. Just we created a different terminology, and people are not necessarily aware that it's the same thing. So one of the big focuses from my point of view from developer advocacy is to kind of look at the terminology we use, the terminology that the rest of the industry is using, and basically just try to realign our messaging such that people are aware that the XRP ledger has this functionality there and has had it for the longest time.
Yeah, so one of our essential views is that although, obviously interest rates have to impact bonds mathematically, and they almost certainly have to impact stocks, and then other things like real estate will certainly be targets of the Fed, there are some asset classes like cryptocurrencies that should be uncorrelated or disconnected from the interest rate markets. So although it hasn't happened yet, crypto's been very correlated with risk assets. I can easily see a world in, say, a year when stocks are down, bonds are down, real estate's down, but crypto is rallying and trading on its own, very much like gold does, or soft commodities like corn, soybeans are all doing very well. So that's the world that I think we will see.
So basically, in 6 to 12 months or so, or longer, all the asset classes are down except for crypto.
Could be, including commodities and other things that are not any kind of fixed quantity thing that doesn't have a direct connection to interest rates could keep rallying. Because, the fundamentals in crypto are still very positive. Obviously, we had a huge bull market and now a huge bear market. But I've been through 5 of those so far, and in 10 years we've been investing in crypto. So it's not, this is not unprecedented. We've seen it a lot.
Global tax deals happening. We got global deals on principles for how they're going to, interact among each other with central bank digital currencies. And people really believe they couldn't come up with a price set for XRP. That's like not even hard to think
There's
about.
no logic there. It doesn't make sense.
If they do that, we believe the value would be higher than it was in September and October of 2021 when we were throwing out 25,000, 37.5 a coin.
So it would be a higher price than the previous prediction.
Probably in the 50,000 now, I would think. We haven't brought the numbers down, but I'm just thinking about all the additional trillions of dollars that got pumped in to the economy.
The debt, yes.
The fact, the Fed right now is really the only participant in our economy. They're basically issuing all the money. That's going into the big banks, and then the big banks are selling, and the hedge funds are selling their crap fucking debt.
Yeah.
Sorry, can I ask on this?
Absolutely. Go ahead.
They're selling their crap debt back to the Fed, and the balance sheet's going parabolic.
Yeah.